Here's the latest from the high priest, Max Keiser, discussing an ETF bait and switch for Bitcoin. Here's the latest from Max Keiser. Check it out. Let me make sure you guys can see the screen here. Let me know. As the article reads in the headline, Max Keiser slams Bitcoin ETFs as a bait and switch. Here's a tweet he shared yesterday, which was pretty alarming, and I shared that on yesterday's pod. In 40 years of finance, I've never seen such coordination and cooperation by so many financial institutions working hand in glove with the regulators and politicians as I'm seeing with the coming wave of Bitcoin ETFs. I think we may be in for an unwelcome surprise. Red alert. Red alert. He also added some clarity. Seems like all these Bitcoin ETFs have agreed to cash in, cash out. Investors will track the price, but have no claim on the actual BTC, a fiat money version of Bitcoin. Simultaneously, Washington is apparently looking to ban self-custody. Don't let them do that. We know Senator Warren is looking to do that, right? If this is true, it's exceptional due to the size of the highly coordinated bait and switch by Wall Street and Washington. He's ultimately saying, I don't trust these mofos. I've been an insider at Wall Street and they're up to something. And I think Max is right. The best way to beat this is to move to Bitcoin country, El Salvador. And that was on the back of this news shared by Swan Media just in. Firms are anticipating a decision from the SEC on Bitcoin spot ETFs shortly after January 8th, with the deadline being January 10th. They are optimistic about the approval, but with a caveat. Unlike the typical ETFs, the Bitcoin spot ETF would require shares to be purchased exclusively with cash. This requirement stems from the SEC's concerns about ETFs potentially being used for money laundering, as if the US dollar and fiat currency isn't used every freaking day for money laundering, as if JP Morgan Chase CEO Jamie Dimon and his firm didn't have to pay $38 billion in fines over the years for things like money laundering. Just saying. If you want to talk about illicit activity, let's keep it real. A detailed report on this development is expected soon. So there you have it. No Claire Gare. We don't trust this mofo. Let me know your thoughts on what he shares about right there. Max also recently tweeted this morning, check it out. Good news. We're looking into a Bitcoin ETF to list here in El Salvador that will allow Bitcoin in and Bitcoin out. This will be a unique product in the world. All 13 Bitcoin ETFs waiting for the listing in the US are cash in, cash out. Just fiat versions of Bitcoin. So very insightful. We'll see what the latest development is on this, and make sure you're following Max on X. He also recently tweeted, the implied hash adjusted price for Bitcoin is $330,000 per coin, meaning the current hash rate is implying that the Bitcoin price should be $330,000. He also commonly talks about how the basically the price of Bitcoin is a lag to the hash rate. So it's lagging behind. So once we catch up to where we should be at 330,000 per Bitcoin. Let me know if you agree or disagree with this sentiment. Now, let's see what else he has shared just recently. The incentive model for Bitcoin includes true altruism, not the fake effective altruism that Sam Scam Bankman-Fried was preaching. So I want to clarify that as well. Now, altruism, if you're not familiar with it, it means ultimately doing the right thing for humanity because it's the right thing to do with no ulterior motive. So that's true altruism, FYI. No other economic model or school does this. This is what the Austrians, libertarians, and anarcho-capitalists miss. Keynesians, socialists, communists, and modern money theorists are not even in the ball game. They talk about fairness, but their methodology always results in guaranteed failure and despotism. So there you have it. Let me know if you agree or disagree with that. Now, also, there was recent news. I dropped the bombshell here on the channel as soon as I heard it from Max. Qatar's sovereign wealth fund is considering investing $500 billion, which is a half a trillion, into Bitcoin. Let's freaking go. The nation of Qatar, very wealthy there in the Middle East. He also shared some very powerful tweets here off the back of the news of the world's largest oil company, Saudi Aramco, partnering with Japanese finance giant SBI Holdings to explore investing in digital assets. Translation, he says, the Kingdom of Saudi Arabia and Qatar are about to drop $1 trillion into Bitcoin. Let me know if you agree or disagree with that sentiment, and how do you feel that would likely impact the price action. He also wrote this back December 3rd. The God candle is a $100,000 uptick in Bitcoin. It's in play. It will shift the global access to wealth and power in a single tick. And he continued, I have one word word for you. $100,000 Bitcoin. God candle fans, send it. Qatar, let's freaking go. The rumors are getting very loud on this. Their sovereign wealth fund is rumored to be looking to buy $500 billion worth of Bitcoin, and he even shared some photos between the president or emir of Qatar meeting with Bukele. I think that was back in September this year. Now, he shared an update. To add clarity, my sources said, Bitcoin makes our $500 billion sovereign wealth fund effectively worthless. We should just convert all of it into Bitcoin. Now, what if they were to do that? We have mass nation state adoption we're on the cusp of right now. Argentina, Suriname, you know what I mean? There's places like Mexico, Brazil, a lot of candidates for adoption of Bitcoin in the upcoming year. And on top of that, we have the sovereign wealth funds, we have the Bitcoin game theory, we have the ETFs, all the asset managers, all racing to get their position. So it couldn't be more bullish right now. But now let's dive deeper into this article. Max Keiser slams Bitcoin ETF as a bait and switch. Here is the latest. The pending approval of the Bitcoin ETFs by the US SEC has been enthusiastically awaited by the crypto industry, with many expecting these regulated vehicles to propel the prices higher and confer greater mainstream credibility. However, the Bitcoin OG, Max Keiser, claims a coordinated bait and switch is brewing behind the scenes. Let me know if you agree with the high priest. Now, Keiser's suspicions over the bait and switch stem from the observing of the unusual coordination and cooperation between legacy money managers and regulators to push the Bitcoin ETFs through. Again, quoting him here, in 40 years of finance, I have never seen such coordination and cooperation by so many financial institutions working hand in glove with the regulators and politicians as I'm seeing with the coming wave of Bitcoin ETFs. I think we may be in for an unwelcome surprise. And while that may not have triggered the alarm bells, Keiser later issued that the recent application amendments that agree to cash settlement terms. Specifically, Keiser stated the cash settlement means that ETF investors have no claim on actual Bitcoin, essentially making the ETF products a fiat version of Bitcoin. Definitely not a good look. Now, tying the dots together, Keiser highlights the simultaneous bid to ban self-custody and the timely forfeiture of over 69,000 Bitcoin from the Silk Road prosecution to the U.S. government further roused his suspicions of the ETF foul play. Quoting him here, if this is true, it is exceptional due to the size of the highly coordinated bait and switch by Wall Street and Washington. And that's coming directly from the high priest himself. Max concerns his voice, echoing larger ongoing debates with Bitcoin circles that several other prominent figures have previously raised. So this, could it be the Trojan horse? What are your thoughts, fam? Recently, the heightened anticipation of Bitcoin ETF approvals, particularly as expectations of price appreciation take hold, has overshadowed early warnings from prominent community figures. Back in November, the co-founder of BitMEX, Arthur Hayes, commented that the Bitcoin ETFs could be heralded in a situation that might not actually be like in the end. Hayes raised concerns that the Bitcoin ETF products have massive controlling influence, which may not align with the retail investors to agents of the state, such as BlackRock and Fidelity. Now, you got to remember, BlackRock and Fidelity, just because they're embracing Bitcoin and looking to make some money off these biddies, doesn't mean they're forces of good in the world. Just like a gun doesn't necessarily make it good or bad, it's the person behind the gun, right? Let that sink in. Quoting him here, if we need certain types of upgrades to enhance the privacy, enhance the encryption, to make it sure it maintains this rock-solid, cryptographically hard monetary asset, those interests are not aligned with the TradeFi status institutions. And I think he makes a great point on that, right? Let me know your thoughts. Now, similarly, we have Peter McCormick, who echoed Hayes' comments by saying the centralization risks presented by Bitcoin ETFs will be good for the price, but overall, bad for Bitcoin. So let me know if you agree or disagree with the high priest, Max Keiser, regarding this bait and switch. Do you think overall they're looking to take advantage of Bitcoin and screw over the investors, or do you think they're going to be doing the right thing? Let me know your thoughts. And what are your thoughts surrounding Max Keiser announcing the good news, looking into a Bitcoin ETF to list here in El Salvador? So congratulations to all those out there. This will allow Bitcoin in and out. This will be a unique product in the world. All 13 Bitcoin ETFs are waiting for the listing in the US are cash in, cash out, just fiat versions of Bitcoin. So there you have it, my crypto fam. Let's get this mofo lit.